Hello, fellow Etoro investors and traders. My name is Dan from Trading with Dan. I have very recently, I think a couple of days ago, got accepted onto the Popular Investor Program. It's Popular Investor Program, that's what it's called, isn't it? On Etoro. So I just wanted to just have a little chat with you guys, let you know sort of my process, how I trade, the information I look at, the markets I trade, the sort of things I tend to look at. Just 'cause I feel that's just the best way, I guess, to get all the info across. I could write like a long post, but I mean, I guess just talking in a video is just an easier way to get things across. So yeah, obviously I've been on here since, well, August I started. So August, September, October, November, and then obviously this month. I hadn't quite got to grips with the rules of the Popular Investor Program, which were obviously to stay under a max risk of 6, basically. So don't go over the max risk. So the first month I was sort of like maybe trading a bit more how I would trade with my own, well, not with my own account, obviously this is my own account, but with one of my more aggressive trading accounts, just obviously bigger position sizes relative to the capital in the account. So yeah, so when I quickly learned that I did need to keep my risk under 6, I then started the process of reeling in the risk that I was taking. So obviously in the first month it was a bit chaotic. A max risk of 8, average risk of 6, which obviously isn't suitable for the investor program, for the Popular Investor Program. But obviously high risk is high reward. So I did manage to book like a 15% gain, which I was I was semi pleased with. I mean, I can do better, maybe taking the risk that I was taking, but yeah. So then I realised that the next month, I thought I had kept my risk basically under the max risk of 6, but it was actually 7. So I did put myself back a month there, because you have to have had a max risk lower than 6 for 2 months. So that put me back obviously a month, because that max risk was 7. But after that, I mean, I've been pretty steady. Max risk for, why can't I say it? Max risk of 4, average risk of 2, which I've pretty much maintained for the past 3 months. Obviously you can see my P&L has kind of dwindled, based obviously on taking less risk. November was actually slightly negative as well. I mean, if you look through my trade history, I trade on 50-minute charts, so I am basically a short-term trader, but I have been having a recent short bias on the S&P, which I've been trading, which obviously the S&P has been grinding upwards. So all I can say is I have been paddling against the tide on that one, against the current on that one. So yeah, to be fair on that basis, I mean, I am happy to have kept my returns about, well, there or thereabout as 1%, which that incidentally is the aim that I'm going for. Well, my aim, yeah, the aim is to generate 1% or over a month. I mean, ideally I want a risk of 1, but I think it may end up being like an average risk of 2, hopefully a max risk of 3, but basically on a lower risk. So yeah, that is my basic strategy. Yeah, so we did have a down month in November. Obviously we're very early in December, so I'm not just gonna stop trading now I've hit 1%. That pretty much was what I did do in October. I think I stopped trading at about 1%, but that was because why was that? That was just because I was, well, just wanting to keep the risk down as well. And obviously, if I'm not trading as much, it keeps the risk down, because obviously my goal at that point was just to qualify to be on the investor program. So, but yeah, so by no means am I going to stop trading now in December on the fifth day, what about the fourth trading day of this month. Just because I've already got 1%. So yeah. And then also, I mean, my negative in November was a trade that I was carrying on over from. Sorry about the little pop-ups, there's little sounds there. That's just some notifications going off. Yeah, that was a carry-on trade. So literally, obviously, you may know the S&P stocks as a whole did take a dump on the first trading day of December. So that obviously carried my position that I was in to, obviously, from that 0.044% loss to the 1.08. So basically, it was a 1.5% swing in my overall P&L. So if that happened like the trading day before, the drop in the S&P, I could have then registered an up month in November and then been cracking on with December. So I mean, to be honest, they're just statistics. It's just there's a red month in November. It would be nice to have them more green, but I mean, it is inconsequential, really, isn't it? It was just slightly annoying on the basis it was just the case of the market movement one day before and after the end of the month, and if it wasn't for that, I wouldn't be thinking twice about it. If I just had just one of those months where things just didn't go to plan and I was down by 0.4%, I mean, so be it. But it was just a case of the market movement on the day, basically on the day of the end of the month and the day after the end of the month, the first trading day of December. So yeah, anyway, so I think I've gone into that in enough detail with you. But yeah, at the moment I have 3 copies. Obviously, when I first started, I had more when people were like, 15%. But I obviously couldn't be part of the Popular Investor Program and maintain risk levels that I was taking to generate high returns. So yeah, so that's that. Yeah, so information wise, I have a subscription to Hedgeye, which I have this Elite Pass subscription, which I did actually get. I mean, I had a month's pass with them, a month's free pass, because I spoke to them about trying on the products. So I had it for a month, and I was really impressed with just the content, basically, the market updates, the daily shows, the emails that I get with the various information. So yeah, I'm not trying to sell this to you guys. I'm just telling you that this is something that I use for my information purposes. But yeah, so like literally daily you'll get their macro show, which is really good, and then you get these things called risk ranges, which are used for trading. They just show you basically the ranges based on the volatility and the trend for the top and the bottom of ranges. So they're good for looking at entries and exits and take profits. Investing ideas, market edges is a good little newsletter that they have, and then yeah, they have real-time alerts of trades they're taking as well. So I mean, some of them, I mean, there are a lot of products that are actually available in Etoro, so some I take, some I don't. But yeah, that's something I'm gonna obviously incorporate in my strategy. So yeah, there's that is a more trade technical sort of, a more trade ideas sort of thing. And then I also have a subscription to Real Vision, which they release a lot of their videos on YouTube. I mean, if you guys are sort of into sort of researching finance and economics and things like that, you may watch a lot of Real Vision videos on YouTube. They are a great source of information, but they release the videos on YouTube probably a good sometimes 2, 3, 4, sometimes even 6 months after they actually do them. So on here I get the actual interviews in a more timely, basically on the day that they do them and release them. So yeah, so that is actually really good. It is, I mean, it is a really useful source of information. This is for sure. And then yeah, so that's it. They're my sources of information. That's a quick background to what I'm looking to achieve on here. So yeah, so my trading strategy. Let me just change these. I chart everything. I chart everything on TradingView. This is my setup. However, this is the chart. I also do trade Bitcoin, but I trade that separate to eToro. I mean, it's quite a volatile market, and it isn't an element of risk that I want to bring into this portfolio on here. So I mean, I don't know whether you guys perceive that as a good or a bad thing. I do know a lot of people on eToro do like to trade crypto, and I also do like to trade crypto, but I do also know that it is quite risky. So I am not massively I'm not basically trading it with my account on here. But yeah, so let me just go. So I should have set this up before. So yeah, the four markets that I do look for trades on. Sorry, the three markets. There are four markets, Bitcoin being the other one, but the three markets that I would be trading on eToro are gold, oil, and the S&P. So yeah, so these are 15-minute charts. 15-minute charts. These this is what's called an awesome oscillator, and these are the alligator moving averages that they use on that what's his name, Bill Williams uses. But I don't actually use these moving averages more than just to keep a track of the price. There's obviously a fast, medium, a slow one. But my main trading strategy is I have my candles set up not on regular candles, but on these candles which are called Heikin-Ashi candles. And what they basically are, they just take an average of the price over the last two candles, so it kind of smooths price out. So if you look at, say, the price on here of crude, of US oil, WTI crude, sorry, and if you compare it to, that's the wrong one, yeah, that's the right one, to the normal candle, you can kind of see it's like green, red, green, red, green, red, green, red a lot more. Whereas if you go into Heikin-Ashi, it's more green, 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 red, 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 green, red, red, red. If you see what I mean. So how I kind of look for trades. It's very simple, really. I have traded for years. Literally, I traded for 2 years. Prior to the 2008 financial crisis, I traded at a prop firm trading bonds in London, trading Euribor, short sterling, government bonds, and trading the yield curve. So I've traded since then, since basically 2006, since I finished uni, 2 years solid then, and the rest of the time on my own, for various stints over the years. But what I have come to the conclusion that keeping it simple is best, and especially now with how markets are at the moment, a bit, they're maybe a little bit more unpredictable than they used to be. I find that short-term trading probably is better. Better in the respect that I don't have to necessarily leave positions on overnight very often, or I don't have to trade the same size positions to get like a move if I'm only going for a move over, like say I'm only going for little trades, do you know what I mean, little wins, more so scalping. So but I mean it's probably classed as scalping because it's on a 15-minute chart rather than, like, say, a daily chart or a weekly chart. But yeah, so anyway, back to what I say. The brief overview of my strategy is I will look for basically exhaustions in the trend, for the trend to start to turn and go the other way, and then I'll take a position, wait for that to exhaust, then take a position the other way, wait for that to exhaust, and then obviously I'll have my stops obviously above where we were trading. So I mean, if you look briefly at this oil, I mean, how I would be trading this would be, I'd be say we just had this rally here and I wasn't in position, so I'm starting fresh. It's the start of the day. I'll be looking for the AO here to be going red, ideally from a high point, so that shows that we basically coming from obviously from a more overextended point than we are, say, here, overextended from the previous price action. So I'll be looking for red candles and then red AOs. So I mean, here potentially would be an entry for me, but this is an entry I wouldn't take because it is quite close after quite a fast move. So obviously I know we can bull flag this out and keep going. You just need to give it more time. So obviously, and you can see the candle still go green. But so to about here, I'll be looking, maybe it is safe to take an entry. We've seen a lot of the declining red bars on here. We're getting red bars on here, then that's why I'll be looking for an entry around here. So yeah, so obviously I have my stop above here, and I'll be running this trade down to where it started to go green on the candles and then green on the AO down here. So you can see we had green on the candles, we didn't get green on the AO, we didn't get to the stop, which would have been above here. And yeah, so until we got down to about here where we would be getting green candles and green on the AO, so I would be looking to get out of that trade and potentially be going long. I mean, you can see that there's not a lot of movement in the price, but however, we have sort of retraced a bit from this bigger move up, and you could then, I mean, my strategy tells me to start to look for longs when we're getting green candles and we're getting green on the AO, so I would be looking to get in, and then yeah, that would potentially be, well, I mean, it is quite volatile, but I mean, I could have got up to here, and then I've been moving my stop up as we were going up, and then been taking out my stops. So it would have again been a profitable trade, as long as the same as this would have been a profitable trade. I also do use the TI sequential, which is an indicator by Tone Vays. It has been working especially well on the ES. I trade the ES is the other one that I trade, so that would be the SPX, the S&P 500. I actually have to pay. I think it's like £48 a month to TradingView to basically get the up-to-date data. I mean, if you have TradingView, you click on the ES1, the E-mini futures, you will have 10-minute delay data, but obviously that's relatively useless to me. So yeah, so this was showing the past day the power of the nines, which is the trend exhaustion sort of number. It indicates the trend exhaustion of a move on the TI indicator. I mean, I'm not going to go into much information on how it works, but just nine is all it goes up to. It doesn't go past 9. So you can see the 9 did mark actually a potential top point of weakness of that move. Obviously it then did resume up. 9 did mark the top of this move here, then we did move down. 9 did mark the top of this move here. Obviously see these candles are counting up. 9 then did count this top. I mean, this was an opposite 9. This was a buy 9. After this sell 9 here, had 9 candles, we had a buy 9, but there was no retrace. There's nothing that would have taken you out of the position. We didn't move up past to where you would have had a stop, and then obviously we kept on coming down. But yeah, but even so, disregarding those, if I take those indicators off, I mean, we are simply looking at red candles, red bars in the AO, potential shorter here. That one you would have got stopped out on, maybe gone long, but then you would have potentially got stopped out, probably for break even, because you move up a bit, and then you're going short again based on the red candles and the red AO, and that would have been a profitable trade. You'd have to be moving your stock. I mean, you get these wicks. I mean, it's just how markets move. It's just how it is. It happens. I mean, they go up here is a great short. We are red A candles, red AO. We go down. Obviously, they don't all work out. I mean, nobody that tells you that's got a trading strategy that works in every trade is going to be telling you the truth, but you've just got to run your profits as much as you can, keep your stops in there, and that is the ideal way to trade. I mean, again, if you look on here on gold, I can make it bigger, can't I? There we go. Yeah, I mean, you can see the 9 stopped the trend in its path. The 9 sort of, there was weakness on the 9. There was the 9 there. There was a 9 at the bottom. This here, this 8 to a 1. This was a 9 until it went up. and then became a 1 because it'd gone higher than the candle, 3 candle, 4 candles before. Yeah, 9 on the top there. I mean, you can see so I don't trade based just on seeing the 9s coming up, but I'm very cognizant of the fact that we could be at the end, we could be at a reversal point once we get the 9. So yeah, so that's it. So that's all I really wanted to say, guys. I mean, I realise the video's gone on for 20 minutes. Yeah, I do try and keep in touch with like all the literally up to date what's happening in each trading days, what the news that's happened, things that have driven the market at various points, and I will probably do daily updates on that. I think that's something that you guys would think would be useful. But yeah, so anyway, so yeah, welcome guys. Thank you for watching my video. Yeah, welcome to my eToro. I mean, like I said, my goals are 1+% a month, keep the risks down, short-term trading. I do see there's a lot of people that are trading in crypto on here, which I personally think is a bit risky, so I won't be doing that. I see a lot of people with long only stock portfolios, which I also think is a bit risky. Long short portfolios, yeah, I mean that's if I was going to play lots of individual stocks to keep trades on for like say weeks, maybe months, that would be how I would play a long short portfolio, or just a long portfolio, but hedging myself, either with VIX, a trade on the VIX, like long the VIX if I was overall long stocks. So obviously the VIX will go up when stocks will go down, so I'm sort of hedged when that volatility comes in. But yeah, anyway, that's just other people's strategies. So but yeah, anyway, so thanks for listening guys, and yeah, and I will be doing more videos soon.